this video is being recorded. We are live, guys. I appreciate y'all for being here. And again, we're doing that research and we're spending the time here today to understand cryptocurrency on a fundamental level, because I believe that's what's going to lead you to long-term success in this market. So today's webinar, guys, take notes, because I got notes here for y'all, right? So you guys take notes on this one, because I guarantee if you don't, you're going to forget it. And this is information that you can duplicate to your team. This is information that you can apply to your current portfolio. So you can start to make sense of all these different cryptocurrencies. Because what I'm talking about tonight, guys, what I want to talk about are the different categories of cryptocurrencies. So who knows maybe a different, maybe a category of cryptocurrency? Drop it in the chat. Give me an example if you have any off the top of your head, right? Because there are lots of different cryptocurrencies out there, are there not? Today, we have over 10,000 different cryptocurrencies out there. So what I wanted to do is to help some of my fellow investors, you guys, to organize the market, to help you understand what projects are like what projects are doing, what's the pros and cons to certain types of projects, and what makes some coins valuable and other coins not. Right? We have a token, coin, NFT. Those are some good examples. Although really, like I said, I think the categories and understanding the fundamentals of these tokens will get you really, really far in this. So let's start off here, guys. And what I'm going to do here, I'm going to give you guys, I have seven different categories. Basically is what I can fit the whole market into, and each cryptocurrency is going to be one of these 7 things. And so each category has different pros and cons, and also different cycles, different reasons why I like open down. And also each category has different use cases and therefore different value. So this is why this is so important to understand, because people ask, why is this coin going down? This is that information that's going to help you understand why the crypto market does what it does, why coins are worth what they're worth. So the first category of cryptocurrency are store of value coins, store of value crypto assets. That's number 1. Right? What is a store of value asset? Well, it's an asset that is designed to hold value for the long term, right? The most important thing when it comes to a store of value asset is its purchasing power. This is something that I've spent so much time in the past explaining, so much time drilling in your guys' head, because this honestly is the basis of cryptocurrency and what we're doing here. I want you guys to understand there's a difference between money and currency. Does anybody know that difference? What's the difference between money and currency? Drop it in the chat if you know. One key difference between money and currency, something that has purchasing power, something that can actually store value. That is what I define as money. And currency, something completely different, because one key difference between the two. Nobody? Geez, I thought y'all would not be on this one. Is supply. The answer I'm looking for is supply. The difference between money and currency is supply. Currency has infinite supply. Currencies can be made whenever they want. Anybody who controls the currencies right now in our current world, it's government and banks. They're allowed to create as much currency as they want, and they continue to create more and more currency every year. So what happens when you create more of something? Economics 101, guys, supply and demand. If you keep raising the supply of something, the value will go down, right? If you keep creating more currency, it's losing its purchasing power. So a huge component of Bitcoin, component of cryptocurrency, is that store of value aspect. Is that Bitcoin, and in my opinion, Bitcoin is the only store of value currency in cryptocurrency. It is the only one that is proven and that people believe in. Some people might make an argument for Litecoin, but Bitcoin is designed to hold value. It's scarce. It is digital gold, right? And so Bitcoin this is really important, because traditional stores of value, like real estate and gold, have been around for a long time, and those actually happen to be the best performing assets. And so the fact that we are witnessing the birth, and we've already seen it, we're witnessing the adoption of a new store of value asset for the world, that is big time. That is major, right? That's what brings everybody here, is Bitcoin, right? right? And so you need to learn about Bitcoin as the brand. Bitcoin, in my opinion, is the only store of value. And the reason this is so powerful is because it's decentralized. The way that Bitcoin works through mining, the incentives of this protocol make it so that nobody can really control it, nobody can manipulate it, right? This is a very, very powerful technology and a very, very powerful way for the future generations to store their value is with Bitcoin, right? And if you're considering whether or not your cryptocurrency or one of your favorite cryptocurrencies is a good store of value, there's one really easy way to check. You need to go on a block explorer and see how the initial supply has been distributed. A big red flag of a coin that, in my opinion, could not be considered a store of value based on this principle. I'm pointing fingers right as it goes, Dogecoin, right? There's one address that holds 25% of Dogecoin. That's not a very good store of value, being that if that holder ever decides to sell, the value of that coin would drop dramatically. You guys, and so the point of store of value is something that's safe, easy to understand, and people understand that it is scarce. That's why it holds value, right? And the one con to store of value coins would be that store of value coins are a bit limited in their functionality. Guys, Bitcoin, a lot of people call it like the pet rock of crypto, right? Because it's just Bitcoin. It's just Bitcoin. It just holds your value. I argue that is very, very, very important, especially given in a world where most people don't have access to store of value assets very readily. Most people hold currency. Most people lose their wealth. So I argue the fact that we're having a store of value currency like Bitcoin available, widely available for the whole world, is a huge, huge pro. And the con is that that's what all Bitcoin does. Bitcoin is not going to be digital cash. Bitcoin is digital gold, right? So that's your first type of crypto asset, a store of value asset. Second, number two type of crypto asset is a smart contract crypto asset. Oh man, we love smart contract crypto assets, right? These are programmable applications. So think of a cryptocurrency that has some smart features, right? The future of this, are AI, things like that, things that are able to run smart. You guys, we can make smart contracts. If you're not sure what that is, that's outside of the scope of this video. Look that up for yourself. Because, our current system of apps, think of all the apps you use, right? They are pretty much centralized on tech giants platforms, right? And that comes with two major disadvantages. One, that all of your data, all of your things that you're doing are being tracked at all times. And two, these are centralized honeypots for hackers, right? How many platforms and apps have we seen got hacked? How many companies have we seen get hacked? And that's a huge issue for people going forward, right? Your data and your privacy are huge, right? And so also, if you think of the financial system, you have to do all your financial sending or receiving money, trading through a bank or a broker, right? And so we have a very antiquated system of apps and organizing people. So smart contracts are going to change everything, because what smart contracts are bringing in is the Web 3.0. Have you guys heard of that? The Web 3.0. Web 3.0 is about decentralizing data, and it's about creating the new smart world, AI, robots. Think of like smart cars, smart fridges, smart everything, a smart city, right? Smart contracts, smart apps. That's what smart contract platforms are, and I'm sure you've heard about this. So this includes NFTs, and really the big thing with smart contracts is when you put a bunch of smart contracts together, you can create what's called a dApp. A dApp is a decentralized application, right? And right now it's crazy. We already have dApps. And so with dApps, guys, dApps aren't run by a company. They're not controlled by anybody. And the most amazing part about dApps is that anybody in the world can use them. There's no identity required to use any of these dApps. We have dApps right now where you can trade, where you can send and receive payments. We have apps for lending. We have dApps for borrowing. These are all live things now. And this, if you guys follow me, know that this is what I'm really, really excited about. DeFi, right? The world of decentralized finance and all the applications that are being built in that ecosystem. And it's crazy is how these dApps can work together. You can have a dApp to trade, you can have a dApp to loan, you can have a dApp, and they all form this new world of financial services. It's a very, very exciting space to be in front of. And smart contracts are really leading the way, and Again, there's no personal info needed to use a dApp. There's no middleman. And right now, the biggest dApp platforms in the world, by far the number one, is Ethereum. Out in like, but not even like close. The king of dApps right now is Ethereum. And in second place would be Binance Chain, Binance Smart Chain, right? Those are the two big dApp platforms in the world right now that host the majority of dApps in crypto, right? And so now for, for dApps, they're different than store of value coins because they get their value from their utility. That's a key. You'll write that down. Smart contract cryptos get their value from their utility. Meaning, the more that someone uses it, the more people that use it, the more it becomes adopted, the more valuable it will become. Because in order to use Ethereum, the fees are paid with ETH. The same with Binance Chain. In order to use Binance Chains, you have to pay the fees with BNB. So the one thing with smart contract cryptos is that usually they don't have a max supply, right? Remember, store of value cryptos have a max supply. That's what gives them their store of value. Smart contract cryptos don't usually, because they need to make sure there's enough liquidity, there's enough supply of tokens for users to be able to use the app. If you need Ethereum to use the app and Ethereum is extremely scarce, it doesn't work as well, right? And so the big plus to the smart contracts is that the usage drives their value. And it's actually crazy because Ethereum and Binance Chain both hit valuations of over $100 billion, multiple hundreds of billions of dollars in valuation. Ethereum got over 500 billion and Binance Smart Chain was over 400 billion at one point. And this is with both of those platforms only having a few million users. Only a few million people use Ethereum, and it has evaluations of hundreds of billions of dollars. And I'm telling you that the more people use this, the more it goes up. That's where its value comes from. Smart contract cryptos, again, the key for this category is that their value is based on the usage, the demand. And so that's the big pro with them. The one cons to smart contract platforms to investing in these kind of category of cryptocurrencies is that which smart contract platform is going to win. There's a huge competition right now to be the smart contract platform, to create the infrastructure for Web 3.0. I personally believe there will be multiple, but in also my personal opinion, in my biggest holding, full transparency, Ethereum is really leading the way. They are head and shoulders above everybody else when it comes to smart contract development, in my opinion, right? So that's your second category. And those two right there, those are the majority of my crypto investments, guys. Bitcoin, Ethereum, store of value, and smart contract platforms. Some other smart contract platforms to check out: Polkadot, Cardano, Kusama. Check out those ones, guys. If you like that category and you want to stick to that, that's a great category to be investing in. Smart contract cryptos, really, you can't go wrong because you're investing in the infrastructure of the future of the world. The infrastructure, think of iOS and Android. Those are the software for all the apps we use now, right? We're recreating that kind of software, those platforms. So that's what you're investing in. So smart contract cryptos are lit. So moving on. Number three, the third category of cryptocurrencies, the third type of crypto, Oracle cryptos. Who knows what oracles are? Who's got some oracles? Where are my Chainlink Marines at? Oracles make it possible to bring real-world data onto the blockchain. Oracles, without them, we wouldn't be able to use these dApps. These new dApps that are on these decentralized databases, these decentralized blockchains, they need real-world data. So we need a new version of what are called APIs. APIs are traditional data feeds. APIs are great, except for the fact that they're very centralized, right? And so for a decentralized technology, we need decentralized solutions. So we can't use centralized data feeds for decentralized protocols because that could be easily manipulated. So we need decentralized data feeds. That's what an oracle is, right? I'm sure everybody here has heard of Chainlink, understands what Chainlink is. Guys, the way I look at Chainlink and what oracles are, this is the shovel, right? This is the road, like this is the infrastructure. These are the thing. Pretty much every single smart contract platform, every single dApp is partner with Chainlink right now. That's how necessary Chainlink and oracles are. We need data. Data includes, price data. Maybe you want to upload weather or time. Any sort of data that the blockchain needs from the real world, it's going to use Chainlink and oracles like it to feed that data in. So this is a huge, huge category of the market. Right? You'd be really sleeping on yourself not to be investing in oracles. And usually these oracles work by using aggregators. So they take a large amount of centralized data feeds, aggregate the average of that, and provide that. And that's how they create a decentralized data feed. So again, the value for Oracle coins is very similar to the value for smart contract coins. They derive their value from utility, meaning the more that people use Chainlink, the more valuable it is, right? And so the plus to this category of cryptocurrencies, of Oracle coins, is that pretty much as long as dApps continue to be in demand and they continue to create dApps, and dApps have usage, those dApps will need oracles. So as the dApp world grows, so will the Oracle world grow. The one downside to this category of crypto investments of oracles is that usually with most of these oracles, the supply was pre-mined. Most of the supplies of these coins was given to early investors and initial team founders, not giving us, the investors, much of an opportunity as much as something like Bitcoin or Yearn Finance, something what was called a fair launch. So that's the problem. Also, another caveat to Oracle cryptos is that a lot of platforms are actually starting to build their own oracles, right? So that can kind of diminish the value of those. But oracles, again, I'm very invested into oracles. They are, like I said, I think they have great utility value in the market. Moving on, number 4, we got 3 more, guys. I got 4 more for you guys. We got 7 of these. I got 4 more of these. These last ones are going to get pretty, these ones are a little bit shorter because those first 3 are really the big ones. Number 4, a category personally that I'm not invested in at all, just full transparency, is payment cryptos. Payment cryptos aim to replace the current systems we use today. So think of PayPal, Western Union. How many of you have ever tried to send money across borders, like internationally? How many of you ever tried to? It takes like 3 to 4 days still. Wait, why? We're video transmitting right now, video chatting. We're transmitting live video instantaneously. But it takes 3 to 5 days to send money somewhere. Why is that? Right? Or you never get like upset, like businesses can get very upset with PayPal-like services because they charge extremely high fees, right? So payment cryptos are basically designing the new payment infrastructure of the world. They're the point of payment cryptos is you're able to not wait 3 to 5 days, not pay a super high fee like 10% at Western Union. You'll be able to send money anywhere, anytime, instantly, very cheaply. That is the point of payment cryptocurrencies. Because today's world, there's always a middleman, and the problems that incur are fees and waiting for the transaction to go through. So again, those payment cryptos are going to eliminate that. And what's cool about payment cryptos is you can store those coins on your own personal wallet, meaning for a lot of places where there's a lot of unbanked people, these sort of payment coins instantly gives them a way to send and receive money, to store coins without a bank. Without a bank. And so good examples of the popular payment coins right now, which ones that I've checked out that have good tech: Bitcoin Cash, Dash, Terra, and Telcoin. When I say the advantage to payment coins is these coins probably have actually the highest likelihood of mass adoption. Dash right now is already being used all over Argentina, right? And I think they have the biggest market opportunity, but they have a major downside, and which is why I'm personally not invested in these coins, is that these are extremely unlikely to ever replace our current financial systems and payment methods. Why is that? Well, who controls these financial systems? Who controls these payment networks? I can leave it right there. You can go there, right? And so there's a huge conflict of interest for regulators to give up their control over payment systems. And so while these coins can definitely catch adoption very fast, they also have a big target on their back, basically, because that kind of leads into the 5th category, which is a very similar to the 4th. The 5th category of cryptocurrency investments are privacy coins. Privacy coins are designed to do what they say: preserve your privacy, right? They're designed to protect your personal data, and like I said, we don't have time to cover all of this information, the full scope of why that's important. But if you've listened to Edward Snowden, if you've, been a part of QC for a while now, I'm sure you understand why privacy is a huge, important feature. And I believe it's a fundamental human right? And so most people don't know that most blockchains are public. Bitcoin is fully public. Ethereum is fully public. Do you need an identity to use Bitcoin or Ethereum? No. But when you use an app like Coinbase or Cash App where you do have identity attached, it's actually not that hard for people to figure out and attach an identity to a wallet address just by looking and verifying all the different transactions you had, right? And so, again, this is about data privacy. And, the thing that's crazy about privacy coins is there's actually governments out there right now, including the US government, that have bounties upwards of $600,000 for anyone who can crack the code of these privacy coins, which should tell you something huge, to tell you that these are a huge threat to our governments and specifically to the IRS, right? The pros to privacy coins is that they're extremely well designed and they were made to last. I find that privacy coins have some of the smartest developers and some of the most educated communities behind them. The most popular privacy coin is Monero. It actually works just very similar to Bitcoin, except that it's fully private. And I'm not telling you guys what to do or what not to do, but these privacy coins are essentially a loophole in the cryptocurrency market right now, because if you get where I'm going with this allows you to transact and send your money without anybody knowing, right? And so the downside to privacy coins is that governments definitely have a big target on their back. They're literally putting bounties out there for people who can hack these. And also, these coins have been getting delisted from exchanges, meaning that sometimes there's less liquidity and it's more likely for price to slip with a privacy coin because of the fact that most major privacy coins are delisted from major exchanges. So you could see that as a pro and a con, if you get what I'm saying. So privacy coins are a hugely important category of cryptocurrency. And now we have number 6, the 6th category of crypto investments. You have exchange tokens. We got 2 more, fam. We got 2 more. We're cruising through this. Exchange tokens, guys. Exchange tokens are owned and operated by the exchanges they belong to. Example, Binance, one of the biggest exchanges, has their own Binance coin. And so most of these exchange tokens, actually, you can think of them in 2 ways. You can think of them like a membership coin and also like a company stock, right? So exchange tokens work in both ways, like a membership token and a company stock. They work in it like a membership token because most of the time they have perks, like you can get trading discounts on Binance or you can get early access to pre-sales, right? So they have perks like a membership token if you hold them. They also are kind of like a company stock because the performance of these exchange tokens depends on the popularity of the exchange. Very similar to smart contract platforms. The more people use a certain exchange, the more value it's going to have. And so another feature of these exchange tokens is most exchanges will buy back their tokens. They will do a burn on their tokens. And so that's something that's going to cause price to rise when a company is going to eliminate and start deleting some of the supply. So the pros to exchange tokens is they're highly likely to appreciate. The economics of exchange tokens are very, very strong. If more people use the exchange, more people trade with it, it's going to go up. And especially when they're giving you trading discounts, things like of that nature. So these coins have great, strong economics for them to go up. The downside to exchange tokens is that the gains don't come as quickly, right? And there's also a lot of regulator pressure when it comes to exchange tokens. Example, we have Binance, then we have Binance.us, right? Because the US has already come out and said different things with when it comes to exchange tokens and whether or not that business is legal or not. So it's to be determined. And also the big thing with exchange tokens is hacks. We've seen Binance be hacked before. We've seen large exchanges like Mt. Gox, one of the first big ever exchanges, hacked. And so that's one of the caveats and one of the cons to consider with exchange tokens is that these exchanges can be hacked, especially the centralized exchange, which is where these kind of exchange coins come from. And so the last category of cryptocurrencies, of cryptocurrency investments, and this is my least favorite of all of them, is the meme coins. But I would be a fool not to address this and not to give its own category. What are meme coins? Meme coins are what they say they are. They really have no use case and they're based on hype. Unfortunate thing about basically you can categorize a meme coin if there's some crazy promise of profit, right? The classic, hey, put $100 in and you become a millionaire, right? Think if somebody said that to you and walking down the street. Hey, you give me $100, I can turn it into $1 million. Would you believe that? No. But unfortunately, new investors are getting bamboozled, fooled into thinking, oh, if I buy this coin that's super, super cheap, 0.000000001 cent, if it only goes to 1 cent, I'll become a millionaire. They buy the whole put $100 in, you can turn $1 million. What's happening is that new investors don't understand the dynamic of price per coin versus the market cap. They look and they say, wow, it's super cheap. But they don't see that, wow, Shiba already has how many billion dollar market cap. And so almost every single one of these meme coins is going to have extremely high supply of coins, which again convinces or tricks the investor into thinking that it's cheap, right? And remember, the price per coin can be manipulated a lot, because if I make a project that has 10 million coins and you make a project that has 10 quadrillion, right? My coin's going to be worth more simply because they're less, even if our projects are equal in market cap. So market cap simply is the price per coin times the amount of coins, just like how stocks work. If a company issues a lot of stocks versus a company that doesn't issue a lot of stocks, just because you issue a lot of stocks doesn't mean they're going to be valuable, right? And so the problem with these meme coins is nothing can be designed to go up without creating value, right? And these meme coins are only designed to make the creators of them wealthy. So the pros to the meme coins, if there are any, yeah, you can get some quick cash if you get lucky. The cons to meme coins, you're essentially gambling. There's no rhyme or reason why any of them go up or down. There's a high likelihood that you can get rug pulled, meaning that you're holding onto the bag and the next day you check it, it's worth nothing. And these are the most manipulated cryptocurrencies there are. Not even close, not even a question. These are the most manipulated cryptocurrencies, right? And so that's that, guys. That's your 7 different cryptocurrencies. That's the 7 categories of crypto investments. Generally, you should be able to categorize every single coin that you own or consider looking at. What kind of coin is this? Is this a store of value coin? Is this a smart contract coin? Is this an oracle? Is this an exchange token? Is this a privacy token? Is this a payment token? Or is this a meme? Because that information I gave you, like go through this again, this will be uploaded to the YouTube. That information I gave you guys will help you out so much in understanding the value of your crypto investments. And also, what categories and what sectors of the market do you want to invest in? Like I said, personally, I'm not invested in all 7 of those categories. I don't have any interest in meme coins or payment cryptos, but I do find value in the other categories. And I tried today to give you guys, even though I revealed my bias because I think that's important, I did my best today to reveal all this information in a non-biased way. So I appreciate you guys for being here. If you need anything from me, you guys already know. You can reach out to me anytime. And again, watch this recording, go through it again, write those value cases down. What makes this type of cryptocurrency valuable? Because that is how you understand the market. When you understand the market, when you have patience, you know what you're buying, you believe in what you're buying, that's when the gains come, guys. So stay patient, stay disciplined, buy Bitcoin, buy Ethereum, short the banks. Appreciate you guys. Peace out.